Let's shift focus to the aviation space now. There's lots happening here as well. With travel back in full form, there's, of course, prices that are skyrocketing across the country. Go First is filing for insolvency in all probabilities. There's, of course, grounding of Go First that we've seen, and that will have positive ramifications perhaps for the incumbent players. We have two gentlemen who track this space very closely, Kapil Kaul, CEO and Director at Kappa India, and Jagannarayan and Padmanabhan, who's the Senior Director at Crystal Market Intelligence and Analytics, who join us now. In fact, Kappa has released a report as well on the outlook for FY24, and in that they have forecasted an industry loss of $1.6 to $1.8 billion. So let's get straight to that. Kapil, thanks a lot for joining in. Very detailed report is what you put out, and I want you to give us just summarize it for us. What is the rationale behind this big loss that the aviation sector will report this year?
Well, good morning. The projections were done in March. At that point of time, the insolvency of Go was not factored in. Our view was that the quarter first of this fiscal, which is what is indicated, airlines like Indigo will have a robust quarter. In fact, they may have the best quarter in their history as for profitability is concerned. But as we go down to Q2 and perhaps Q3, we're expecting a lot of supply, one which is grounded. Roughly about 125 aircrafts are grounded. So those aircraft, in majority of those aircrafts will come back. And you would see almost about 100 plus additions that are likely to come for this fiscal. So a combination of grounded aircraft back in the air and a combination of the new capacity that is to be coming most probably from second half of the fiscal. A combination of that, along with the estimates of fuel around fuel around 80 to 82 and the dollar around 85. Those were the projections for the fiscal FY24 when we did these estimates around Feb-March. And it's largely because it's going to be inducted a lot of capacity based on the trends that we see, and that capacity in a high-cost environment would be very challenging to hold up to the yields that you see in quarter one and possibly quarter two.
Okay, let me get Jagannarayan and Padmanabhan into this discussion as well. Mr. Padmanabhan, Kappa in their report says that there is this large unmet domestic traffic demand, right? Almost 15 million plus in the year gone by. And that's also because more than 100 aircrafts are on ground due to supply chain issues. Do you think this situation could get resolved? Because what's also happening now is this unbelievable surge in prices because of this demand-supply mismatch. What do you see as the way forward in the first half of, or rather in the second half of 2023?
Yeah, so thanks for having me here. And I kind of second what Kapil had kind of mentioned. The realizations that the airlines are having just now is quite unheard of. So that's first part of it in terms of the ticket prices and all of that. But this needs to get moderated, at least in the second part. So there are two aspects to what you had asked. One is the demand part of it, met demand, which is there. The supply part of it. The supply is going to get eased significantly going forward. And also, again, saying what Kapil had mentioned in terms of the new aircraft getting added. So once these aircraft gets added across, then the pricing pressures will start coming in. Then the yields needs to get moderated. Like, for example, Indigo, maybe it's north of 5 rupees that we are looking at 5 rupees per RPK for as an yield. That needs to get moderated going forward. So I think in the shorter term, because of this unforeseen grounding of airlines of Go Air has contributed to this surge in airfare. B, it is also the time when the season for travel for tourism part of it is there, at least on the domestic side, and hence people would have booked some of their tickets and onwards for other parts of it, and they would have had to fly out. So I think those are the things which are contributing at least now. So Q2 may still go at least for the month of April, June and beyond, July first half. Afterwards, a lot of moderations needs to start kicking in.
Okay. See, from an investor standpoint or the viewers right now, they're interested in a lot of the listed players. So let's talk about that. I mean, there are two of them, right? There's Indigo and SpiceJet. Kapil, with Go First insolvency, it's expected to remove about 9% of the domestic supply in the aviation sector. Now, A, could this result in better yields for Indigo in a capacity-constrained environment? And B, Indigo is already at about 56% market share. Is there scope to grow their market share further?
Well, Indigo is in an excellent position. Even without Go Air's insolvency, Indigo's fundamentals are robust, very strong, a product, brand, cash, almost about 50 more planes coming in, another record order likely. So everything is in place with them. So even without the insolvency of Go, I would think Indigo would have been well placed as far profitability is concerned and valuations are concerned. So Indigo is perhaps, as for the sector is concerned, in an excellent position to take forward their strengths and build on from that. As for their let's say profitability is concerned, as I said, I expect a record profitability in Q1, and the market share perhaps depends upon how when the Go Air comes back, what will happen to the capacity of SpiceJet going forward, and the kind of capacity that Air India is able to bring in the domestic. But I see their market share closer to 60%, 55-60% for this fiscal. It could touch 60, but 55-60 is a good range for Indigo.
Okay, so record profitability for Indigo this year and market share of almost 60% is what you're looking at by the end of the year.
I said record profitability for Q1. We expect them Q1 to be the best.
Okay, and what about the full year?
Well, as I said, full year we don't share a full year forecast for everyone. We expect that industry would be into losses. Largely, what's going to happen in the second half of the fiscal. But Indigo is well placed to be profitable for this year. This is my assessment.
Mr. Padmanabhan, do you see the Tata Group gain more ground because it's now put together? The Tata Group enjoys about 35% of the airspace with Air India, Air Asia, and Vistara. Your thoughts on whether they can cede market share from Indigo?
Yeah, so I think it will be good to look at dissect this a bit more granular in that way, where I think the Tatas would be or planning to focus significantly is in the international market, and they have kind of said that some of the regional routes they have defocused themselves and want to look at profitable sectors, and also because of the acquisition of Air India in their fold. And the slots which are being available and all of that, they would be better utilizing that part of this whole market part of it. And I think they would continue to grow. Their market share will also boost up with Go Air going, taking time to come up. Then that market share will also be gained by Vistara, Air India, and the Air Asia part of it. So all of that is going to go well for the whole Tata Group part of it. So it wouldn't see, I think it won't be a market gain because of Indigo's loss. It will be a market gain, and the overall sector is also expected to grow. I think you kind of talked about, and not seen Papa's report, but our expectation is about close to about 12% growth for FY24 over FY23, and hence that will also aid in overall growth of market. I mean, not market share, but at least the market part.
Sure. Just one final question I have to ask both of you. Of course, we have time only for one, so let me get Kapil into this discussion, into the last point on predatory pricing, right? After Go First insolvency, and you briefly mentioned that there was suddenly this surge in pricing, but the Civil Aviation Minister a couple of days ago came through and said that, they're not going to encourage predatory pricing by incumbents, etc. But do you think things are going to change over the next couple of weeks? Because there is clearly a demand-supply mismatch at the moment.
Yes, the demand-supply mismatch is very serious. Prior to COVID, if you compare to pre-COVID, we are about 130 aircraft short. We never had such a capacity crisis in the sector that we have been tracking since 2003. So this is quite serious, and the logical outcome of that kind of capacity crisis is that the fares would go up. I am not of the opinion that there should be a knee-jerk reaction as for asking the airlines to reduce fares, whether it's done by the government or the DGCA. There must be an institutional mechanism to check whether competition, consumer, there's an impact on competition, consumer. Unless until we don't have an institutional mechanism, we won't be able to address this. You can address it for a week, 10 days, and then it'll be back to normal. The question is that when you have such a capacity crisis, it is natural for the fares to go up. You have seen ACI come up with a report that India's trajectory in terms of pricing has been highest, but nobody talks that we have 120 plus aircraft on ground. You will actually address this by institutional framework, by just making and giving instructions or advising the airlines. My assessment that's not feasible. Government needs to set up, and because of the duopoly that we have two large airlines having about 80% of the market share, it is important that the institutional mechanisms in terms of checking competition and consumer impact is addressed, and that has to be done not just during the surge in fare. It's general. Every quarter, stress tests are done whether the consumer and competition impact is addressed. Yes. Otherwise, we get this challenge. I don't see how this works otherwise.
Right. Gentlemen, great speaking with both of you. Thank you very much for your time. As always, here on CNBC-TV18, it's a sector which has got everyone's attention, both, of course, because people own stock in companies. There are not very many listed, but, of course, because I guess all of us are flyers. Well, and fares matter. Thanks very much, both of you, for joining us. Now,